Hey, everybody, welcome to another, our last actually meeting, quarterly meeting for the Employer Advisory Committee. Kim Petz is also here for me from Employer Services. What we have done that's a little bit different, and hopefully you guys find it helpful, we've added a QR code to the slide. This is will drop you right into the CalSTRS website where all of the materials and agenda, all the PowerPoints that you're going to see today are all available. So it's something that we're trying. It worked pretty well in a previous meeting last week. So again, hopefully just from ease of use, that's a tool that you guys will find helpful, and we can apply that going forward. See what other housekeeping things am I forgetting? This is a webinar, so your cameras as attendees, your cameras won't pop on. If you have questions, please feel free to raise your hand, and we'll take those questions either during a presentation, if that's the preference of the presenter, or at the conclusion of the presentation. We promise we will get to everyone. We have discontinued the question and answer just because it was very complicated and difficult to focus attention on the presentation and the content of the presentation, seeing questions coming in. So again, hopefully that's again for a helpful, more beneficial conversation and dialogue today. Anything else, Kim?
No, I think we're good. If we have anyone though that is calling in and not on the webinar, you still, and anyone actually, can use the advisory committee at calstrs.com email to send in questions. If you're not comfortable speaking in the meeting, or you're not in a place where you can, that's also one. And we have folks that are monitoring that particular box and can pop in with your question as need be. And so we can get it answered that way as well.
Perfect. So with that, I think we'll get started. If we could just move to the next. So again, you can just see again a really quick overview of the agenda for today's meeting. Again, added that QR code to help drop you right into the materials and the decks that will be presented. I think that's it. With that, again, just questions again, please feel free to raise your hands. And with that, we will get started. So we've got Danny from Treasury Management.
Great, thank you. Good afternoon all, and happy Wednesday. My name is Daniel Garza, and I go by Danny. I'm the Treasury Manager here at CalSTRS, and the unit that I'm with, we're responsible for a lot of your payments that come to the organization. So with that, I have a couple updates to share that are going to impact the community of employers that are on ACH. So if you recall, the employers that are submitting payments to CalSTRS for contributions that fall under the AB 2052, making payments via ACH methodology. So with that, I'll go right into it. So next slide, please. Essentially, there's two items here. And the first one is it's our multi-factor authentication for all registered users of PayCal. This is the portal that it's an agency portal that the employers that are on ACH debit log into to submit payments for contributions to CalSTRS. And then the second item here is we have changes coming to our bank account. So I'm going to address those and speak more to that. And I'll hold all questions to the end of my presentation. So feel free to, at the end to chime in and ask any questions. Next slide, please. So what is multi-factor authentication? And on a high level, what it is, it's a service that it's an added security measure that will enhance the user's login process for that PayCal site. So this new process, the way it works is it would send a validation code to the user's email address, and then you have to enter that validation code during the payment portal PayCal access site to obtain access. So I'll go in a little more details as far as screenshots and how that look and feel, but primarily the feature is really to provide an extra security mechanism for that particular web portal. So the next second bullet point, this is kind of overviewing the scenarios of impacts it would have on some of the users. So the first one being new or first-time users to the PayCal website will have to go through this one-time setup of the multi-factor authentication. Second one is here is for existing registered users that have an existing username or password. Again, it'll be that first-time setup of the multi-factor authentication service. And then the final one is a registered user that has a password that's expired, or you want to retrieve your password. You would have to go through this setup as well. Now, the estimated rollout is coming in either late December of this year, 2022, to mid-January of 2023. We'll make future announcements as far as more exact dates on that rollout. And I'll talk later in the presentation as far as how we're going to make those communications. And so just so you're aware, the multi-factor authentication is that service that you might have seen at other websites that have you authenticate via validation code. And I'll go more into details around that, but that validation code will be set up. So every time you log in to the PayCal site, you would have to check your email to enter that validation code. So the next several slides, I'm going to show you what that's going to look like. So next slide, please. So kind of drawing your attention to the top of the screenshot here. This is what essentially you would see as a new register of the PayCal site. It looks a little similar to what you had in the past, the top portion where you will have your username and confirm your username, provide a password and confirm the password again with the password criteria that's denoted up top, and then put your email and put a confirmation email. That second part of that first screenshot up top, contact name, and then there's a little box that has the reCAPTCHA. Essentially, this is trying to avoid any kind of intent that has out there as far as not being a human. So it says, I'm not a robot. You would click in that box, and then it would then create a profile for yourself to get a first-time user. Once you do that, you would get this validation email that I talked about earlier, sent to your email address that you put there. And then you will be asked in the prompt in the second screen, that verification box, to enter that validation code. So next screen. And this is what that validation email will look like. You'll see this non-reply email that gets sent out. It would have your digits there that you would enter as your verification code. And that's what you would enter on that previous screen that I showed you earlier. Now, the bottom portion of this slide here is for individuals that either forgot their password or entered their password incorrectly and have to retrieve that password. So this is, again, for existing users that have a password retrieval process. So you would typically click on, if you look on the left side of the bottom slide here, what's circled in red, that forgot password, that will prompt you then to enter the following screen, which is you would enter your agency enrollment identification number and your username. Now, as a quick note, that agency enrollment identification number, we call it CalSTRS employer code. So this is a 5-digit numerical code that's specific to each employer that, again, submits payments via ACH to CalSTRS. So you should know that already at time of enrollment. Our team will be in communication with you to provide you that information. Next screen. And so this screenshot here, the top portion is what you'll see as an account profile, your username that you created at the onset of you having a profile, the email address that you use for that particular profile, and then again, the security code, you would enter that security code in this particular screen. If for some reason any of that information was entered incorrectly, you would see the second screenshot on the bottom of this slide that has an access denied. And at that point, you would contact your administrator being us. So this will be the e-payments inbox that I'll show you later on. You would contact us to help you through any kind of difficulties or retrieving any kind of information to gain access to your PayCal site. Now, we are intending to update, can you go back to the previous slide? We are intending to update some documentation That's going to have, again, more details with the screenshots that I just presented in the following locations. Our e-payment website within CalSTRS website. That's one there. And the other one is the SO portal. If you're familiar with the SO portal, we will also have the documentation uploaded there, so you can take a look at that as a reference guide. Next slide. Now, the next change that you're going to see here is, again, for employers that are submitting payments to CalSTRS via ACH. This is how this is impacting this segment of the population. So we are having changes coming to our bank account, and this is due to an acquisition. US Bank Corp is acquiring Union Bank, and actually that acquisition got approved, regulatory approval, just last month. So they're moving forward with that. And because of that acquisition, there's going to be a couple changes. That second bullet point there, one of the changes here is the company ID might be changing for us. What does that mean? What does that entail for you all? So for example, if you send ACH payments via that PayCal site, you might have to update the company ID on your ACH filters. This company ID is specific. It's a company ID for CalSTRS. It's specific. So when an ACH transaction takes place out of your bank account, it's an approved entity. So CalSTRS currently, if you're on PayCal, is an approved entity you can send money to. But if the company ID does change, you will again relate that to the population, and you will have to update that in your filters, typically with your financial institution. And that third bullet point there, our actual account, go back, thank you. Our actual account and routing numbers will change as well. That change is probably coming more in the spring of 2023. Again, we'll notify you of that change. This is for, again, employers that are doing ACH credit payments to CalSTRS. So this is not for the population that submits payments via PayCal, but this is the ones that submit payments directly from their own ERP system, their own treasury system, or their own financial institution. So you would have to update the account number and the routing number at that particular juncture. But again, when that comes around, we'll be communicating to that segment of the population that's doing ACH credits. Finally, at the bottom, I note here our e-payments inbox. We monitor that. And if you have any questions related to what I just presented and you're not able to ask right now, or you think about it later, feel free to email that inbox and we'll be happy to respond. So with that, I'll pause there and see if anybody has any questions at this time.
Thanks, Danny. I'm not seeing any hands raised.
No, I don't see any.
Again, appreciate the presentation. There are some hyperlinks that were included in the PowerPoint presentations. So again, it's another easy, quick way to get you to the landing pages that are needed to provide additional information and updates. So again, Danny, appreciate you being here today. I'm still not seeing any hands raised. So I think with that, we'll move on to the next piece of the agenda.
Thank you.
Thanks. So we've got Nick, who's coming in from Financial Services.
Good afternoon, everyone. My name is Nick Lang. I'm with the Contributions Unit in Financial Services, and I wanted to put out some information to all of you about archiving employer documents on the Contributions account portal. If you could wait until the end with your questions, I'd appreciate it. Next slide. So we're going to start archiving old invoices and other employer documents on the Contributions account portal. So in case you're not familiar, that's the portal that you access through SO to manage your contribution accounts. Besides invoices, other documents that will be archived include dunning notices, monthly account statements, P&I invoice detail reports, and P&I invoice summary reports. Next slide. Okay, so we're not doing this until spring of next year, but we want to let you know now so that in case you do want to save those documents, you can go on there now and get them in the meantime. We're going to archive anything older than 7 years, so anything before about 2016 or so. And the archived documents, they will no longer be available to you on the contributions account portal. So hopefully between now and then, if you do want to save these documents for your records, then you can have time to do that. Next slide. Does anyone have any questions?
I see Teresa's got her hand raised.
Okay.
Teresa?
Teresa, you're unmuted. We should be able to hear you.
Right. Here we go.
Okay. I had to click and mute myself and unmute again once you did that. Just for reference. Hi, Nick.
Hi.
Once these items are archived, if we needed to retrieve an old document, is there a process for us to have you go retrieve them for us?
Right now we're looking at our options. We're looking at our data retention policy and what IT options we have if we have the ability to store. So I'm not sure right now. They may be just deleted and even we won't be able to get them, or we may choose to archive them where there might be a way to still get them, but we haven't made a final decision on that yet.
Okay, so currently you're removing them from the CAPS system. You don't know what you're going to do with them yet. So they're not necessarily being archived for sure, because you don't know which way you're going to go.
Correct.
Okay. Will this then be done annually to go up another year?
It'll be done throughout the year. So that 7-year cutoff will just, probably it could be monthly, but definitely it won't be once a year. It'll be done. This archiving will happen throughout the year instead of just once a year.
Right, but once you get all 2016 completed, next fiscal year, will you do 2017? Is that the plan?
Yeah,
Okay.
we'll just start doing it with that 7-year cutoff, kind of rolling forward every month.
Thank you.
You're welcome. And yeah, go ahead, Anna.
Anna, go ahead and unmute, and then you can ask your question.
Can you hear me now?
Yes.
Okay, thank you. Okay, so sorry, I think this does this affect the cash management where it shows like, you have this balance and it was applied this way. Sometimes, I may forget to apply a credit and it gets automatically applied because of the 90-day has expired. So currently I can go in and say, okay, this remaining balance was paid with a credit or these 2 credits that you had there to be applied in the future. Does it include that?
No, it won't affect that. That's the account management part of it. That doesn't affect it. It's really the invoices and notices tile in the contributions account portal where that has all these documents that are going to be archived. But the part you're talking about, that's account management, that's not going to be affected. You'll still see all your receivables and payments and everything in credits in there, and it won't affect that.
Okay, thank you.
You're welcome.
Any other questions for Nick? Doesn't look like it.
All right. Thank you, everyone.
Thanks, Nick. Okay, so moving on to our next presentation, we can go on to the next slide. So we're going to bring our friends from audits, Cheryl and Chris, in and have them talk about the 2023 audit plan and some updates around that.
Thank you.
Hi, I'm Cheryl Cervantes Dietz, and I'm the Chief Auditor of Audit Services. And presenting with me is Chris Wall, who's my Assistant Director of Employer Audits. Next slide. So this presentation will cover the audit plan development, our risk assessment process, as well as provide an employer audit update. Next slide. So professional standards for internal auditing requires the chief auditor to develop a risk-based plan that sets the priorities of the audit activities, which is consistent with the organization's goals. So the part of the risk assessment process contributes to how our plan is developed, how it aligns with our strategic goals, and it links to enterprise risks. So I'm going to turn it over to Chris, who's going to go through the employer audit process, and then we'll wrap up with an update. Next slide. Oh, Chris, you're on mute.
Sorry about that. So yeah, my name is Chris Wall, and I was going to talk to you a little bit about starting with the risk assessment. And our risk assessment is really broken down into 3 areas. The first one, as you can see on our slide, is the compliance risk. And as part of the employer audit's risk assessment process, we evaluate compliance risks associated with each of our employers and utilize our experiences to identify the highest risk topics. We also take into account stakeholder input. This is a qualitative component that we add to our risk assessment. And in this step, we also survey various business areas to gain their input and consider the concerns that they have identified of any ongoing concerns, anything that they wanted to add to our risk assessment. And we also take into account issues identified in the management letter completed by our external auditors. In this selection, and we take all of this information into account as we select our highest risk areas, as well as the employers that we're going to be auditing in each one of those areas. The final component would be our data analytics. And here we apply data analytics to payroll data from the last 2 fiscal years that we apply to each employers in the high risk areas. I'll go over a little more of that in the data analytics piece in a few slides. Next slide. Okay, and so this slide here kind of represents our entire audit universe. And what we're looking at here is all of the different areas we could potentially audit when we're doing our audits. But in this year, we really are focusing on the 3 highest risk areas that we identified on the previous slide. And first area we're going to be looking at is base compensation. This area is really the base pay rate, the base pay, such as the pay rate reported or the regular earnings that are being reported to us. The next slide will be special compensation. This is also known as remuneration in addition to salary. And finally, the 3rd highest risk area that we identified was unused sick leave. So in our next year's audit plan, we'll be looking at those 3 high risk areas. Next slide. This slide is where we get a little more into the data analytics that I was bringing up on a previous slide. And this slide provides additional detail on the areas we are proposing to audit in the 2023 audit plan and how we applied certain criteria to each of those areas to identify potential employers to audit. Once the high-risk areas are selected, we use the data analytics to rank and prioritize each of the employers. I'll go over a little bit over each one of them. In special compensation, we're really looking at annual special compensation that was reported over $2,500. The second would be for PEPR members. We're looking at annual special compensation that was reported over $1,200. And we look at one-time bonuses. For the base compensation areas, we're looking at retired members with annual compensation increases that are greater than 10%. We look at retiring members with annual compensation over $120,000. For active members, with annual compensation increases greater than 20%. And we look at active members near retirement age with annual compensation increases greater than 10%. And then finally, for unused sick leave, we look for retirees with a high amounts of unused basic sick leave that was reported to us. And we look at retirees with excess sick leave that was or was not reported to us. Those are all of the different, these are all examples of some of the different ways we use data analytics to help us help drive which employers we're going to be sampling. This isn't an all-inclusive list, but it gives you a pretty good idea of some of the ways we look at the data. Next slide. And then finally, we take all of that information that we gather on the previous slide, and from the criteria mentioned, then we rank the employers into high, medium, and low categories for each auditable risk area. It is possible that one employer can rank high in more than one area. So for example, you could have someone that's going to be ranking high in one or more. So it could be someone, one employer that is high in base compensation, special compensation, and sick leave. So those totals could include multiple areas. And then based on the results of our risk assessment and the additional requirements associated with the implementation of AB 1667, for next year's audit plan, we're proposing to complete a range of between 90 and 110 audits. And then to be completely transparent, we have listed the potential employers that we may audit in the 2023 audit plan in an appendix of this presentation. When you guys do go online, these slides are available to you. If you do go to the last 3 pages, you will see a list of our top 203 audits that we could potentially audit. But I want to point out, we are only completing 90 to 110 audits for the year. So whether your agency is on that list or not, it doesn't necessarily mean you will be audited. Those are just going to be those highest ranked employers that you see in that red column. Next slide.
Okay, so I'll take this, Chris, and also just that document or that listing of employers that are potential to audit next year. Those are also, it's a living document. So if we do add to that, we'll update that list that's going to be on the calstrs.com, which I'll explain in 1 second. So essentially, as Chris said, we have 90 to 110 employer audits to complete next year, and those will start in January. That's we're on a calendar year basis. But before, I also wanted to kind of give you an update on 2022 audit plan. So right now we have 104 final reports and we have 16 remaining, but we also have quite a few that are in progress that may not be issued until 2023. So although they're in the process in 2022 and they're part of a 22 plan, but they might be issued that will not be subject to AB 1667. But with the transition of AB 1667, we understand there's a transition, that transition, is going to be difficult. So we're proposing a blackout period where we're not going to kick off any new audits after next week or this week, really. So that way that gives time, even though we may not be able to finish some of these 2022 plans, at least we're not beginning anything after this week. There's some that are kicking off that have already been in pre-filled work. So those are, even though so there may be opportune times when you'll get contacted, and that is because we've already started the audit. You just may not have been aware of it, and we're engaging, so you're going to be notified. But again, we're not assigning any more audits for 2022. And then also in preparing for AB 1667, and actually to be transparent, we are adding those employers that are potential for an audit next in 2023 onto our website. And we include the link here. We also will be posting our final reports to that website. Right now we're working on it. So we're looking to at least have it done by the end of the year. We'd like to do it before that if we can, but I didn't want to overpromise. I'd rather just over-deliver. So next slide, please. So we're happy to answer any questions you may have.
Teresa, go ahead and unmute and you can ask your question.
Thank you. Back on the high risk area slide where you were listing special compensation, annual special compensation over 2,500 and 1,200.
The next slide, please.
This
Yes.
one, yes. Master stipends alone can be higher than that. It's kind of a low number, but this is just so you can gather who you're concerned with, not necessarily who you're going to choose.
Yeah.
Why is the number so low, I guess?
Yeah, so this is where it kind of starts. We, of course, didn't give you all of the elements of the risk assessment, but we can rank them differently depending on how much it is. So if it's a really high amount, it could get a different score, but we're going to be looking at anyone over $2,500 initially. That's what we're starting to look with for special compensation, but I do agree they can be higher, and we take all of that into account, but this is kind of the lowest level of our scores or the dollar.
Okay. So if a person is at the $2,500 range, let's say their score is probably going to be lower, but if they're at 15,000, their score might be a higher number.
We will take all of that into consideration. Yeah,
Okay.
in selecting.
Awesome. Thank you. Oh, oops.
Rosanna, if you want to go ahead and unmute. Oh. No more question, Rosanna? Okay, any other questions? Please raise your hand. All right, well, thank you, Chris and Cheryl. We really appreciate your presentation. And if we have any other questions for you, we will let you know, or we can deal with them in the open session.
Great, thank you.
Thank you.
And, just to elaborate a little bit, at our CalSTRS board meeting last week, we did have the Audits and Risk Committee meeting. There was another report out related to the employer audits. So again, more information and materials can be found on the CalSTRS board webpage. And in fact, there may be other items on the audits and risk management agenda that may be of interest to this group beyond just the work plan for the employer audits. And with that, we will turn it over to Joycelyn Martinez-Wade.
Good afternoon, everyone. Joycelyn, Director of Governmental Relations. I'm happy to be here with you this afternoon. And I've got a presentation that kind of straddles the end of last legislative session, 2022, and what we're embarking on for 2023, at least what we know of so far from a CalSTRS perspective. And I'll stop at the end of each slide for questions. So if we could go to the next slide. This is a list of bills that were chaptered at the end of 2022. So at the end of September, the governor acted on them and signed them. Among your materials is also our legislative matrix. And so that has all of the bills that the board took positions on or was tracking this year that directly and specifically affect CalSTRS. So if you want to look at what happened to some of the other bills, please go ahead and locate that with the QR code. And I'm going to focus on the ones here that have employer impacts and then some of the member-facing impacts, so that you just have that knowledge in case your employees ask you about them. So we're going to start with AB 1667, which already got a shout out in the last presentation. This obviously is a bill that has many pieces to it. Assessment and implementation meetings have been going on internally since even before the signature, because we wanted to be prepared since there was so much going on. Decisions are still being made on exactly how to roll out all of the pieces. So as we have specifics and more details, we'll be sharing those updates with you as appropriate. And obviously with some pieces of the bill being effective January 1st, you'll probably get those through other communication channels, but I'm sure we'll be back at the next EAC meeting to give you more information. And just to remind you, there's sort of four main provisions of the bill that deal with the employer audit and appeals processes, the overpayments that in the past members have been responsible for, and there are changes to that in the bill. Additional resources on interpretations of credible compensation, and then an advisory letter process on the same topic. And I will say that the overpayments piece is the most technology heavy piece of that. A lot of the other pieces have changes to processes, publications, information that will be out there for you. The employer audit and appeals processes, as you heard in the last presentation, is effective January 1st. And again, we heard some about, exactly how it would affect audits in play. And so we'll make sure more specifics get out there on that as we get that solidified. And also the overpayment piece is effective January 1st, 2023. And again, more to come. The additional resources piece is tied to the fiscal year, the school year. So you'll see more on that the closer we get to July 1st, 2023. And that is also when the advisory letter process becomes effective. And so just so you know, you'll see stuff on a rolling basis, as I'm sure you're aware, as laws change, the implementation timeline is short, and you've probably been faced with that as well. So again, you might not see information on the processes and publications that would be updated for July 1st right away. But we will obviously be in touch as all of that comes together. So that's what I have on AB 1667. On AB 1824, a housekeeping bill, there are some pieces that could be member facing in that, but really it was a lot of clarification. So no practical changes that you will have to implement or anything like that. So I think our closeout report is almost done for that bill, but just wanted to close the loop on that one. SB 868, also a member facing bill, just so you know, with a lot of technology implications for us, but this is going to be an increase for our oldest retirees who retired before 1999. So you may not know some of these people because you probably started work after that point, or maybe you do, but this was great enhancement for them. They missed some of the other pieces of our plan design, like the longevity bonus and the career factor. And so based on percentages in law, starting July 1st, they'll start to accumulate this additional benefit as part of their purchasing power protection. And they would see it at the earliest in their October 1st benefit payments, but it could go into future benefit payments, but that will start accumulating July 1st, 2023. Just want you to be aware of that in case any questions come up. Again, it's retirees prior to 1999. So if anyone asks, you know, they're retiring tomorrow, this isn't going to apply to them at this point in time. Then SB 1402, I'm going to skip over divestment. SB 1402, military service credit purchases. This is for military service prior to membership. So in case anyone's asking if there's a way to do this, we're updating our procedures and publications, and folks will be able to inquire with us starting January 1st about purchasing that service credit. There are specifics around how many years of CalSTRS service they have to have in order to purchase military service, and maximum of 4 years, et cetera. But we'll have details on those available if you start to get questions in the new year. So now I'll stop there. I see a hand raised for Craig. Okay, Craig, it looks like lowered their hand.
I think you may have done that. Oh, his hand is raised.
Here we go.
Can you hear me now?
Yes.
Sorry.
Yes.
When I saw the legislative part, I just wanted to throw something out that I thought was so important that I've been noticing and seeing where CalSTRS might stand on that. As you know, all of our school districts, I think, are looking for more and more teachers and specialized teachers. And, you know, they're all shorthanded. I know I hear about the economy, but we're still trying to hire ICR hiring board, Mendocino County, and it's huge. You know, we're still short. And something that's come up, because I've been around a long time, so I've never heard it come up as much as I do now, and that's the windfall elimination. And we actually got, I don't know, about a month ago, I got emails and it was passed around from our union. And I thought it was great. They said they were trying to bring it up to the, Congress again. And I didn't hear anything more on it, but knowing that I'm seeing teachers, the people, they're savvy now. They come in and they've been maybe out doing a regular position, and they come in and they find out and they ask me questions. I said, well, yeah, you're not going to pay Social Security and you're going to be subject to windfall if you work 20 years. They know about, they're asking these questions, and this could be something, a detriment to getting more teachers hired. And I'm wondering, is CalSTRS, I would think CalSTRS would have a big push or position on changing this, or, maybe even lowering the limits, something. Have you heard anything about that? Or
Yeah, that's a really good question. And that's interesting because it's coming up in that different perspective where people are more aware now. Many times we have members who do work a full career and somehow had paid into Social Security earlier before they began teaching or became an educator. And then when they retire, they weren't aware of it and weren't aware that their Social Security benefit could be cut or even eliminated because of their CalSTRS service. So it's interesting that now they're more aware, but then it could be a barrier. So I'm glad you brought up that perspective. Our board does consistently take support positions, and it's in the matrix. So there was a bill that was in the legislature, or sorry, in Congress over the last couple of years, and I can just look real quickly. So HR 82, and there's a Senate companion bill, but that's on the repeal of the WEP and the governmental pension offset, the GPO, government pension offset provision as well. So the WEP affects your own Social Security benefit. The GPO affects one you might get from a spousal benefit. And the board is always involved in taking a support position on those. And so that's out there. And I know that member groups have been more effective in getting co-authors in the last several months. And so that's been a big push to get the bill to the floor and have it heard. I know that has a lot of cost to it because eliminating the WEP and the GPO would just require those Social Security benefits now to be paid out when they aren't currently. There are approaches on modifying the WEP, which are much more complex and may not be as lucrative, of course, for the retirees, which is part of why the Congress folks are looking at that and senators are looking at that, because then it would be a little lower cost, but it gives like a flat dollar amount, depends on which proposal you're looking at, flat dollar amount to people who are already retired. It does also then affect people who did not vest in CalSTRS, for example, or another non-covered plan. And so I think those implications make the reform bills a bit more complicated. They focus on the WEP since that's a person's own benefit from Social Security. But yeah, we monitor that and what's happening with that. And I'm going to go back and kind of think on the fact of about it being a barrier, as you brought up today.
Thank you.
Yeah, of course. Anything else on 2022? It's a big year. So appreciate it. Okay, next slide, please. So looking forward to 2023. We had 3 proposals that went to the Teachers Retirement Board last week, and they approved us moving forward with all 3 of these. You can see there's 1 legislative proposal and 2 regulatory proposals. I'm going to guess and say you're going to be more interested in the regulatory proposals, but I do want you to know about the legislative proposal in case you get questions again from your employees on this. With their approval, this means that we are going to go look for an author to introduce the bill in 2023. So that's something we still have to do. And so there's no guarantee yet that it'll be introduced. Another piece is the service retirement benefit backdating idea. It does have, again, technology implications. I've mentioned everything we're working on. So this proposal would be based on when the Teachers Retirement Board takes action to make it effective. So it would be a delayed implementation we'd be looking at. And what it does is that it limits how far back someone can backdate their service retirement benefit. You probably know you turn in your application, you can turn it in up to 6 months before your retirement date. And we're looking at limiting that back, how far back you can date it so that you can backdate it 6 months and it'll be 180 days, that we like to do things in calendar days to be a little bit more exact. Right now, you can pretty much backdate until 2012. There have been issues with large lump sums affecting people's tax liability, of course, and then other income-based benefits, including Medicare and Social Security, if folks are getting anything from Social Security. So again, limiting it 6 months forward, 6 months back, this accommodates folks who maybe have decided after summer break or what have you, they thought they were coming back. Maybe they won't now. They can backdate and have their summertime costs covered by that service retirement benefit. So that's the legislative proposal. I would say that's farther along in the process, if you will. On the regulatory side, the board essentially is giving us buy-in to start working on these in earnest with an internal drafting team. And so we get all of the business areas who are affected at CalSTRS together to work on the solution to the problems that we have. And then we also start the pre-notice work, as they call it, and it's prior to the formal rulemaking process where we engage with our stakeholders and interested parties. And so of course we will be back to talk to you here at EAC. And then we also talk to our member groups, advocates, and for the different areas that we work with. So we'll be approaching all of that activity up in the next few months. And then eventually we do come back to the board for a formal issuance of the rulemaking process. And so where then there's a formal notice, there's a public comment period, you submit written comments, many times in the past, there's been an opportunity for a public hearing, and that will start later on down the road. And we'll of course keep you apprised of that. I'm going to start with the first one, which by the words on the screen, you know that this is addressing an issue that came up a couple of EACs ago, where there was potentially confusion around the definition of credible compensation for our CalSTRS 2% at 62 members. And in the statute, it talks about the compensation being paid each pay period in which credible service is performed. And it's pretty specific there. And there's an instance that can come up where members may be working for a partial month at the beginning or the end of the year, and their payments are actually spread out evenly amongst the other pay periods or the other months that they're working. And when PEPR was passed, so this is again, the 2 at 62 members are members who are subject to the Public Employees Pension Reform Act, but it was never the intent to exclude someone's full-time assignment, their full-time position, even if there was a couple of weeks here and there that are worked outside of the usual pay periods they're being paid. So we need to work on language and regulations that will make sure to clarify and make that specific so that we don't have to have that confusion out there anymore. And we'll make sure that those folks are covered. And we appreciate that there was a conversation about it, and glad to bring you this next step to the solution. So that's the first regulatory proposal. And the second regulatory proposal is about our penalties and interest regulations, which I'm sure you're familiar with. They came about in 2012. There was one update, I think, in 2015 based on the funding plan when it came into effect. But there have been many other bills and laws that have been passed, many other situations that have come up that we're getting more familiar with. And so we want to go back and make sure the regulations are up to snuff and they're operating the way we would like them to. There's a lot to determine here. I feel like it's less specific at this point in time than the previous regulatory proposal. But we're looking at potentially situations that have come up that maybe it would help us to have additional exemptions in the regulations. If you're familiar, there are about 4 exemptions right now. Perhaps there are other situations that are coming up that have been decided on a case-by-case basis, but it would be easier for employers and CalSTRS staff to have it down in black and white in the regulations. So we'll be looking at that. And also potentially the process that we have for charging interest when penalties and interest payments are late. It's something that's in place now, but to have it laid out could be very helpful in regulations. And there may be other things that come up as we dig into it that, need improvement. And so sort of it could be considered housekeeping. We want to make sure we keep these working well for us. There may be some substantive pieces that come up. So it's not like a housekeeping legislative proposal, but I'm glad we're getting into the realm of making sure things are up to snuff as we go forward. So those are the 3 proposals that the board approved last week. And just so you know, the write-ups are part of the board package. So they're not linked to the EAC materials, but if you want to go digging for those on our website, and just go to the board meetings, and it was our November board meeting at the regular meeting. And I will take any questions on those. Okay. I'm not seeing any, but I appreciate your time. Thanks so much.
Thanks, Joycelyn.
Thanks.
So now we come to our open forum part of our meeting. And before we kind of dive into that, I just wanted to piggyback off of Joycelyn's regulatory proposal regarding paid in every pay period, and reiterate something that we had mentioned in our last meeting, that we are not asking anyone to make any changes to any reporting or the way that you're doing any reporting at this time. And if you do have any questions, please to contact your training and development representative in employer services or your employer help representative in employer services, and we can deal with that on a case-by-case basis. But again, no changes until such time as those regulations go forward. So on that note, if you have any questions about anything from today's meeting, or I don't believe we had any questions that came in prior to the meeting. So if you have something that's maybe not on our agenda that you wanted to ask about, now is your time. So I'll be looking for raised hands.
And maybe, Kim, we can also switch to the next slide, because I think one of the questions is going to be meetings for 2023, as this is our last planned meeting for this calendar year. So we are planning 2 conversations. Thus far, we've got February 1st, which will be a Zoom conversation, and then May 10th, again, another Zoom conversation. So.
And on that note, there will also, or should also be, a survey that comes out to everyone in attendance today that asks some questions about next year's schedule. So if you could please take a few minutes and fill that out. And I do see a raised hand from Lori. I'm gonna allow you here to unmute. So if you hit your unmute and go ahead.
I just have a quick question on the pension solution project. Do we have any update on that? I know, or maybe in February we can have an update on that, when that conversion's gonna happen, or?
Yeah, we definitely can add that to February's meeting for you. I think we probably already were planning on that because there are some things that are still in motion at this point in time that we don't have anything finalized to bring to you today. But as you all know and have been, watching our board meetings and such, that we are in a little bit of a transition with the project. So we'll have a better update for you in February.
Oh, great, thanks.
Any other questions? Okay. If there is something that you weren't comfortable asking verbally in front of the group, please, again, use that advisorycommittee@calstrs.com email address, and we'll be happy to route your question to the right resource and make sure you get that answered. And with that, I think we can thank you all for your attendance and wish everyone a happy afternoon.
Thanks, Kim. Appreciate your co-moderation today.